Welcome back to Sudden Wealth. This is my last video of the day. I would like to speak a little bit about interest rates going forward. Why does Federal Reserve and the other central banks been printing money for the last 13 years with the exception of the last? What is the impact of said low interest rates and inflation? Is there any connection? Are people just wrong about what to expect, etc.? So going back to the first point, interest rates going forward. I do believe that the most bullish thing for the markets is that the Fed stops here and we manage to stay in this high level of rates without any major break in the economy but more importantly in the markets. And even more importantly, in the credit markets. If we manage to do that, that would be the most bullish scenario. Now, I do think we can stay here for some months, maybe 6 months to a year without major issues, but here is the issue. Is the US running budget surpluses? No. Is the US running trade surplus? No. What happens at the end of a year when the US has these huge deficits? Well, they borrow the money, okay, but interest rates are much higher, which means that interest payments are much higher, and particularly the majority of government debt is short term, so they're actually paying much higher interest rates. But since the deficits keep compounding, the pain of these interest payments will only rise because the debt is also rising. So what to do? Where is the breaking point? I don't know. But this is one of the main reasons why I think eventually we will need to cut rates and maybe next time actually go negative because of the sheer size of the debt, not just the US. I could have given the example of Europe, the example of Japan, the example of China is all the same. So, because governments are the largest debtors in the world, they cannot avoid high interest. They cannot take high interest rates for a long time. So when everybody's worrying about the commercial real estate, everyone seems to be convinced that governments are just fine. And as I mentioned before, if everyone thinks the commercial real estate is the problem, then it is not the problem. But if everyone thinks that the government debt is completely safe, maybe other debts are not, but the government one is extremely safe, then maybe that will be the issue. Not this. I don't think it's going to be this year, probably not even next year. I think we'll start seeing some cracks in 2025. These cycles take a long time to reproduce. And am I saying that we're going to hold rates at this level for the next 2 full years? Probably not. Probably we'll start decreasing a little bit towards the end of 2024, but then we will have the big decreases, I think probably late 2025. Now, why are governments or why are central banks increasing rates? Well, because inflation is very high. But do higher rates really stop inflation? Or do lower rates really cause inflation? Most people think yes. I actually think no. Why? We have been printing money non-stop. The US printed, forget COVID. So before COVID, the US printed about 24% of its GDP. The ECB printed about 46%, and Japan printed about 120%. Japan has zero inflation for 30 years before 2022. The ECB, same story. Europe, inflation between 0, 1.5 most of the times, and the US, similar story. We've crossed in the US a few times the 2% mark, but not that many times. Now, why is that? Because actually, when you're doing QE, the inflation, you're basically debasing your currency. And you can see that in the S&P 500 appreciation. So if you actually map out the money supply, and the S&P, their correlation is almost 100%. And where you see the inflation is on asset price inflation. And now you may ask, why don't you see it in the consumer inflation? Very simple. Because when they started the QE programs, the world was already heavily indebted. What does that mean? Well, during 2008 and 9, or 10 or 11, even in the years after, do you think a person like me and you would get 5 million as a loan? No. People like Bill Gates get it because they have the collateral, their fortune, to back it up. Why would they go into debt if they have a fortune? Because with debt, you do not pay taxes. Very simple. So what I'm saying is, irregardless of the level of the interest rates, there's a point in normal person's life where they have credit card debt, mortgage, student loans, whatever. And when they try to get loans from the bank says no. So that's how you can have very low interest rates and actually not that much inflation. Why? Because the lenders, the gatekeepers, the banks are just gatekeepers of money, will block the majority of the population. However, lower interest rates helps out valuations of stocks. So stocks go up. Also, if interest rates go down, mortgages go down, value of real estate goes up. Now, who owns the majority of stocks and real estate? The very wealthy people. The top 20% owns about 90% of the real estate and stocks in the world, which means those people actually benefit from the low interest rates because they can borrow money. Why can they borrow money? Because they're wealthy. So you see things going up, like stocks and real estate, but when you go to the supermarket, because the benefit of those low interest rates do not reach the majority of population, they actually don't have extra funds. So the supply and demand for the basic goods that you see in the supermarket actually doesn't go up. That's why you can have the CPI between 0 and 2%. I know it's manipulated, I get it. Let's say it's even double, 0 and 4%, despite printing trillions of dollars, trillions of euros, trillions of yen, trillions of Chinese yuan, etc. Now, actually, there's one cost for the companies, which is called cost of financing. If interest rates are very low, their cost base is actually a bit lower, so they don't need to charge as much. If interest rates go higher, let's say they start paying, instead of paying 1%, 2%, they start paying 7%, you better believe that those extra 5% will go to the consumer. Now, what happened during COVID? People were told, stay at home. Here's a bunch of free money. In the US, I know people that were getting $12,000 per month on top of their salary because they didn't lost it. Think about it, because of the number of children they had. $12,000 per month on top of their salary. At the same time, they were told, many areas of the country, stay home, don't produce. So all of a sudden, you have this excess of cash in the economy, and this time, it's not in the banking system. No. It's in the mail of every citizen. And the supply is going down because people are being told to be at home. Transport across the ocean is very difficult and is going up 400 and 500%. Why? Because it's very difficult. Supply demand again. So inflation goes up. Let's say it went up to 20% in the US, but they measured at 9%. Now, I don't know if it's 4% or not, but I can tell you it's markedly shorter than it used to be. Why? Because this excess of cash no longer exists. The supply is increasing, and even despite the war that we're seeing today, that actually affects the 6th largest agricultural country, producing country in the world, inflation is actually not as bad for the amount of dollars that are printed, and euros and yen, etc. So, what is the idea? Oh, we raise interest rates, people stop borrowing, they start saving, inflation goes down. Wrong, because most people have nothing to save. So, in this situation, their only shot is to keep demanding for higher pay, and most of the times actually getting second jobs. That's why you get the job market is so on fire. It's not because the country is extremely productive. It's because people are not required, but in order to meet their obligations, they actually need to work 2 and 3 jobs to make you work. There are actually programs in the US that teach you how to work remotely and have 2 jobs at the same time or 3 jobs at the same time and be productive. But in any case, that's besides the point. So it's not just the effect of interest rates. It's just where is the money when they raise interest rates or when they lower interest rate in the first case, where is the money going to? So for example, the gold bugs were expecting hyperinflation since 2009 when we started this program. This program is now much bigger than it has ever been. The balance sheet of the Fed went up much more than they expected, and that scenario of runaway destructive inflation never came to fruition. And that is the reason why, because the inflation or the debasement of currency was going straight to stocks and real estate. Why? Because only the richest people had access to it, and richest people own assets and real estate. But they consume, when they go to the supermarket, they consume the same as you and me in proportion. It's not like, for example, if let's say you now get $50 million, are you going to start going to the supermarket and getting 50 cartons of milk? Or are you going to go to the supermarket every time you go, they're going to get 30 pounds of beef? No, because you cannot eat that much. You cannot spend that much. You'll probably, maybe you're going to inflate some Louis Vuitton and some Ferrari dealerships, but that's about it. So it's important to actually look back in history, see what happened, see what all of these specialists predicted, and actually what happened. And by the way, when it comes with artificial intelligence, that will be extremely deflationary. Will it be enough to increase our productivity in such a way that we solve the rapidly raising debt due to the twin deficits? I don't know. We'll need to see. However, I do think a lot of politicians are placing all their bets on that. So, in any case, thank you for your attention. I just wanted to flag this matter to you, because most people think, if the Fed now cuts rates, inflation will just explode. I don't think so. I actually don't think so. If they start again dropping $10,000 per person on the mail, yes, then and cut supply at the same time, yes, then you're gonna have inflation again. It's very simple. So in any case, that's about it, and thank you guys, and see you in the next one.